Hello, my name is Matt Russell. I'm an FX Power Course instructor. Here at FXCM, I want to welcome everybody to the Daily FX Walkthrough. Going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley. So if you give me one moment here, I'm going to go ahead and bring up DailyFX.com, and usually the first thing I do when I get there is scroll down to Jamie's technical report. Now, obviously today was a unprecedented day, the biggest fall ever in the Dow in terms of the raw points, certainly not in percentage terms. But let's go ahead and click on Jamie's report. Usually myself, personally, I like to ignore fundamentals, but fundamentals such as this are hard to ignore. So let's see what Jamie has to say about the euro dollar and read the synopsis on top. The U.S. dollar is at a crossroads. There are bullish and bearish patterns that are both valid right now. Things should clear up in the next few days, though. So if we go down a little more to read more specifically about the euro dollar, as that's the pair that I primarily trade, again, things are not very clear. That support line that we had yesterday did fail, and let me go ahead and bring up the most recent chart, the chart that we were viewing yesterday. This is the 60-minute. And let me get a better view here of the line that we were using yesterday. And we can go ahead and add that simple trend line once again, and we can see that that trend line did fail. It did initially actually act as support. We can see a slight bounce off that trend line. That's about, I believe, about a 40 or 50 pip bounce initially, but then obviously the pair did close back beneath it. And then after that, again, just a very wild and volatile day. And this is what I was speaking about yesterday in terms of, both Jamie and I were expecting, the euro dollar to fall, or Jamie was expecting that, and I was in agreement with him, to be more accurate. And then we can see what I was speaking about, the market trying to pick your pocket. And this is one of those things where, if you were short the euro dollar, the trade's moving in your favor. You might have been a little scared near that support line, as prices did find support, but then you had the close beneath it, you had the confirmation, and then what happens next? A massive rally, I believe over 250 pips up there near the Sunday gap, and we can see a nice 2-pip shuffle above the Sunday night high there. And in my opinion, what the market was doing at that point was simply trying to fill that Sunday gap, speaking in a purely technical sense, ignoring all the fundamental news out there, which again is very difficult to ignore. So again, situation not very clear at all right now. Best to sit on the sidelines or take very small positions. And when things are confusing like this, usually I just like to keep it simple, take a step back. So what I've also done is use the daily chart here, and let's work with what we know. And we had what could be a B wave top above, just slightly below that 149 figure, and we could see a nice little resistance line setting up now, using that high as the second point. You can also use some of these points up there as well. That's something we can work on. That's a little thin as well, moving forward. As Jamie mentioned, the picture isn't clear. Both the bullish and the bearish patterns make sense right now. What I would recommend, in a short-term sense, maybe that short-term trade yesterday off that hourly support line, there could have been a 20-30 pip trade there. But other than that, certainly sit on the sidelines. Wait until Jamie's next report, or maybe the report after that, where there is a little more clarity, a little more, the technical levels a little more defined, where we can have that good trade setup. Not necessarily that trade setup is going to work out in our favor, but the risk will be very defined. And that's the real issue here, is that in a volatile market such as this, it's very hard to define your risk. And even if you are on the right side, with the volatility, again, that massive move we had, during the afternoon session, where the euro dollar rallied 250 pips, left behind that very long wick again, and that's another technical sign that I like to use one of my favorites is a long wick, and we can see that long wick right there. That's what I'm speaking about, is this candle right there, and usually that signifies a significant top. So in my opinion, I would be bearish against the high of this candle wick. 145.69 is the print right there, but the market is some 250 pips beneath that point right now. So it's just wild trading action right now. Again, I'd recommend sitting on the sidelines and waiting for the next couple of reports from Jamie to get a clearer signal on the market, and again, to find trades where your risk will be better defined. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.